Hey traders, Raghee here, and in this Friday recap video I'm going to take you through some of the trades of the week that we have had on, mainly so you can see the setups that we have been taking advantage of, and you'll see the repeating nature of these setups, so they kind of become, well, case studies in many ways. I'm also going to show you some of the tools that I will be diving into with some tutorials next week, and one of them happens to be the Darvin. Now, let me mention something about the Darvin. This is a tool that was created by Nicholas Darvin back in the 50s. He wasn't a trader, he was actually a dancer, and he wrote a pretty popular book called How I Made $2 Million in the Stock Market. And it basically chronicles an 18-month time in his life where he took, I think it was $10,000, turned it into $2 million. This was in the 1950s. He was a trend follower, and he used this tool called the Darvin box. And you'll see that's plotted across my charts. Now, this is a tool that next week I'm going to show you guys how to put on the TradingView platform, TOS, how to put this on TradeStation, and I believe also Sierra, but I use TradeStation, and I'm going to show you how to put this tool on a number of platforms. And I'm super stoked to show you how I use it. It's been something I've been using on and off since I've been about 17 years old. So I had a love of older tools, classic tools that you could calculate by hand, and this happens to be one of them. So anyways, let me show you a few things with this tool, along with some of the trades that we were watching today. Now, one of the challenges that longer term traders have when they transition to, for example, say short-term approaches, and they start to look at longer-term trend follows, like I primarily am, they will basically look at a chart and figure, well, I'll get another shot, because they're thinking of intraday time frames and the fact that intraday time frames will yield multiple opportunities throughout a trading session. You know, that's not the case with end of day. End of day charts are going to give you a shot maybe over the course of a couple hours, maybe a session or two, but if you don't have a waiting order, typically a limit order, waiting, you're not going to be able to take advantage of the trade. And that's okay. Sometimes we miss trades. Sometimes trades don't reach our targets. I'm going to show you two examples today, one in the euro and one in the bonds. So Euro US, of course, you could execute with EC futures and the FXE ETF. So looking at the Euro futures right now, our level was 1135, 1.1135. And we actually got down to 1.1131. So if you had a limit order waiting out there, it's pretty much assured that you got your fill. And today, here we are about 60 points above that, or 60 pips, I should say. Now, those of you that have been following my FXE trades, both in the recap video and in the premium area and in the chat room at Simpler Futures, you know that we have been not only playing the puts on FXE, we got long via calls, and we have had just a great time playing the FXE ETF to both the long and the short side. But it all starts with a trade on the Euro US, on the Forex side. So one of the questions I got was, hey, Rag, I missed the trade. Is there another way I can get in? So what we did is we pivoted to a shorter term time frame, and I made very clear, hey, it's not going to be the same quality setup as that daily, but there is validity. So as long as you understand that this isn't chasing, but there is a certain element of, you know, leaving some pips on the table, that's okay, as long as you acknowledge that that's the situation here. So basically what happened earlier is that we've been waiting for this kind of what I call a hook, or kind of a roll to the upside. And whether you were looking at the 30-minute chart, or perhaps you were looking at the 15-minute chart, one of the things that we could have taken advantage of was what I call a wave reversal. Now, this can be tricky depending upon what time of day it actually occurs, right? So the one that I believe we ended up talking about the most was on the 60-minute, because, you know, if you had a waiting order, you probably got this executed during the European and UK session. But if you found this during the US session, you ended up paying up, although it was still a decent trade. It was a profitable one through about 1170, as you can see here. But the cool thing was, the reason I was really amped up for this trade was it basically took out, at the time, now forget all these other Darvin boxes for a minute. See that? This one right there, it took the wave out, the top line of the wave, the 34 EMA on the high, while it was taking the Darvis out. Now, one of the reasons I love the Darvis is it's automatically plotted on your chart. One of the most difficult things a lot of traders have in the early stages of learning something is the subjective nature of a lot of analysis, right? The way you interpret it, what you do with it, what it means. Darvis kind of takes all that out of the equation. It's much more objective. And when you have this objective set of levels overlapping with something that we use called the wave reversal, all of a sudden you've got a couple different reasons that this is going to be, brought to your attention. So that's why I get excited about these kind of opportunities intraday. Another one happened in gold. A lot of traders are waiting for this reversal on gold, and I said, you know what? Wait for the Darvis to basically, not only be broken, but wait for the wave to be broken. So intraday, for those of you that wanted that gold trade intraday, it's not really going anywhere yet. We set it up on both the 30 and the 60, but if you wanted to get long on a decent level, that is something you can take into the weekend. And I believe with relatively low risk, you just want to make sure while the upper level of the box was broken, that the lower level of the box holds. In a lot of ways, the box becomes not only a momentum entry, but an exhaustion entry in the same direction, and it also gives you an idea of how and where you can place your stops. So we'll talk more about that next week when I teach you how I use and have been using Darvis for about, 2.5 decades. And let's also talk about TLT. This is the 30-year. This is also part of the trade of the week that we posted publicly this week. And it was a long position on TLT. Now that sounds great. Rob, great trade. Well, yes, but I was actually looking at the US. And it did not get to the level that I wanted. TLT did, but US didn't quite make it. So a lot of traders, again, ask me, okay, Rog, what do we do? How can we take advantage of the move to the upside? And it's still that same wave reversal. It's taking advantage of a break of the top line of the wave as the market looks to head higher. So if you think about what an intraday trend looks like on my charts, and I'll teach you more about this, but if you think about what an intraday downtrend specifically looks on my charts, and I'm trying to capitalize on the move to the upside, once we break the wave, we start plotting green grab candles, and then we can also look to break an upper line of the box, which isn't necessary, but it does help confirm. That's how you can take advantage of not only exhaustive or oversold buys, but also momentum entries. Some of you that might use the squeeze, which is John's Keltner and Bollinger Band indicator, you can automate that, but you can also, he gives everybody the actual recipe with the indicators and the settings for the squeeze. You can actually put that on your charts. And one of the things that's actually a very cool confirmation is the squeeze indicator. I actually have the automated version of it, but the squeeze indicator along with the Darvis, that's actually one of those things that I actually love to use as almost a standalone entry trigger. So in the right market trend, it's very powerful. All right, so I realize I've run a little over than I normally do, but I like giving you guys as much value as I can in these recap videos. Those are 3 markets that we are not only looking at, but we'll continue to look at going forward. All right, gang, I'll see you in the next update.